In this video, I'm going to cover my exact portfolio buys and sells this week and my thoughts on specific markets and current allocation goals. For those that are new to the channel, my overall strategy is to synthesize outsourced research into a diversified portfolio. I focus mostly on cycle analysis and I keep things extremely simple, as you'll see in my commentary. So you can see in this pie chart here, I still have a very high exposure to the precious metal sector, about 46% of my portfolio. I also have a 15% cash position, and I'm continuously looking for opportunities to allocate that capital into sectors I feel are undervalued. Now, the theme this week is oil and gas, and I have all my position changes highlighted in orange here. The left is all of my open positions so that you can see where the changes stack up in my overall portfolio. And then I also have the specific changes themselves and the dollar amounts on the right here so that you can see exact changes if it's a second, third, fourth, or fifth buy. Now, before I get into the stocks, let's just comment on the market really quick. There's varying bodies of thoughts on the energy market and when peak oil demand is going to be and things like that. To be completely honest, I have no idea when that's going to be, but I don't think it's going to be anytime soon. And I definitely think there's going to be another bull cycle. But after the next bull cycle, I might be more wary of investing in specifically crude in the energy sector. I think natural gas will continue to stay around, and I think there's a lot to say about the uranium sector as well. There's a lot more interest in nuclear power, and I don't have any exposure right now. I had exposure in the past, but I sold out. So if we see a significant pullback in the uranium market, I'll get positioned again for the longer term. But back to crude oil. I love the chart here. I like that it's kind of into a double bottom here. It's totally possible that it could keep grinding lower, and that's okay. My goal is to get exposure and dollar cost average in as a market is nearing the bottom 20% of its potential lows or where I think it's going to start bottoming. And so I like gaining exposure here. So the first stock that I picked up more of is CVX. I started buying CVX over a year ago, and I'm just going to continue to accumulate as it has weakness here. As oil's been drifting lower, a lot of these oil stocks have just been consolidating sideways or mildly lower. Chevron's a great company, and they've been increasing their dividend for, I believe, over 50 years. So I think it's a great stock to own long term for me. I put in about another $900 this week, and that brings me up to a total position value of around 5,000, which is about 1% of my overall portfolio. The next buy is Vermilion Energy. This stock is a bit more volatile and riskier. So this is more of a beta play, a more leveraged play on the energy market. So this is a smaller position. I went ahead and added another $455. So that total position is, I had forgot to update some of the positions, so I just updated them. So Vermilion Energy is now, I have about a 2K investment in that, and that's about 0.42% of my portfolio. The next buy is ExxonMobil. This is just an oil powerhouse stock, very well run company, pays a decent dividend, and has had continued strength as oil has drifted lower. So if you recall the Chevron stock, it's been kind of grinding down a little bit, but Exxon has actually been drifting upward instead of slightly upward instead of slightly down. And you can see the low in April was actually higher than the low back in January of 24. So a lot more strength in this stock than other ones. So I went ahead and bought a $3,900 position, and that's about a 0.8% of my portfolio. And then I'll come back to Brunswick Exploration. I'm going to skip up to CNQ. CNQ is Canadian Natural Resources. And I found out about this stock looking at an article written by Rick Rule. Rick Rule, for those that don't know, is a well-known natural resource investor. He used to run the US branch of Sprott, and that's a well-known natural resource investment company. So Rick had a list of Canadian oil and gas stocks, and out of the list that he had, I liked this one the best. They have a lot of stable growth. The yield is at 5%, which is a bit higher than some of the other oil and gas stocks. And they have a great outlook from analysts on Seeking Alpha. So I started with a $2,000 position in this. So since this is an initial buy in CNQ, I wanted to do a little bit less so that I have space to add. So that's it for the oil and gas sector. The next position I added to is Brunswick Exploration. I've talked about this stock before. They're a lithium explorer. They're very early stage. I really like the geologist, Robert Wares, who's on the board of directors. And as far as the lithium market, I don't know if it's going to bottom now or if it's going to bottom in a few years, but the price is well off the highs from a few years ago. I'm willing to wait on this stock. With these microcap explorer stocks where they have a very long timeline of exploration and development, you never know what's going to happen and you never know when the market's going to start valuing it. So with the lithium market where it's at, I'm okay waiting on this stock. Again, it could be many years before this has some success, but if the lithium market did pick up speed here, I think this stock would perform a little bit and perhaps I would take some off for some profit. Overall, I'm willing to wait on this one. Even if it takes time, I think there's a lot of potential for this to have a great run. So I added $600 to this position and it's at a total of about $2,700 invested. And it's currently about 0.5% of my portfolio. Now, the last change that I did this week is a new options trade on silver using SLV. So pulling up the silver chart, I mentioned this in a video during the week. Silver had this consolidation last week. I had mentioned that if we had a close over this 59.40 area, that silver could have a little parabolic move up to 70 or 75. And what I was going to do is use the profits that I made on the previous trade in November to bet on this new potentially explosive move. So I put a 4K position on Tuesday, and the market's pulled back a bit. I'm still a little bit green on that position. The plan is if we have that run to 70, 75, I'll take profit. If not, I bought those options out until June. And so if we ended up having a pullback here, I still think there's continued upside in the precious metals market, even if there was a consolidation over the next 6 to 8 months or just few months or whatever it is. So if we ended up having a pullback, then I'll just kind of judge in real time what to do. But I might end up rolling out those June options to Jan of 2027, or I might just add to them, or I might take a loss. It just depends what happens, but I'm okay holding for now. I feel very good about this trade since I only risked my profits from the last trade, and then I still have all the profits that I've made from earlier in the year on these precious metals options trades. Now, moving into the market outlook, I'll just start with precious metals since I just talked about the silver trade. Right now, I'm eyeing a major market shifting point in April of next year. That's what cycle analysis points to. I don't know what that's going to look like. We just have to see how it plays out over time, but that could look like a rally into the April timeframe, or we could start a correction and it could look like a bottom in April. The cycle points don't necessarily always mark a top or a bottom. They typically mark a change in trend, whatever that is. So if it moves up into that date, it could be a top. If it moves down into that date, it could be a low. But I am tracking this April timeframe of next year and playing my portfolio and especially the shorter term trades according to that. Now, besides this market, I'm still tracking the potash market. I have positions in Nutrien and Intrepid, and I like how Nutrien is acting here. It's been kind of explosive off the bottom. I bought my initial position earlier in November, I think, but my average price is down here in the 54 range. I had thought about adding to it. I don't think I'm going to add to it at this point just because it's starting to move. But if we had a pullback here, this looks like it could be like a cup pattern. If we built a little handle right here, I might add more. But I think for now, I'm okay just holding what I have. Looking back at my sheet here, I have about a $3,000 position and the same thing in Intrepid. So with the strength in Nutrien, it looks like the potash market is having some strength and Intrepid should continue that strength with it. That's it for this week. To receive alerts of my real-time buys and sells, follow me on X, link in the video description, and subscribe here on YouTube for weekly and monthly portfolio updates and other market insights. Thanks for watching, and I'll see you in the next video.